A lot has happened this past week and even over the weekend across geopolitics, trade wars, central bank moves, and inflation risk that could impact our watch list of US 30, GBP USD, Euro USD, USD JPY, GBP JPY, and gold. So let's break down the fundamentals and market sentiment so we can position smartly going into this next week. Welcome to the new weekly outlook for this new week. First, starting off in the Middle East, we have the Israeli Prime Minister who announced plans for a full military takeover of Gaza to topple Hamas after nearly 2 years of conflict. The IDF already controls roughly 75% of Gaza, but this raises the risk of broader regional spillover. For markets, that means headline-driven safe haven flows. Gold and the Japanese yen can spike quickly on escalation. Oil hasn't reacted just yet, but any signal of supply disruption could change that instantly. Over to Eastern Europe, we have Trump, who is set to meet Putin in Alaska this Friday, raising hopes for a breakthrough in Ukraine. The Kremlin says talks could happen within days, but the US is still dangling secondary sanctions if no ceasefire is reached. The market read here is if progress is made, oil could drop further, easing headline inflation pressure. But if talks collapse, then we expect crude to spike, risk sentiment to sour, equities to pull back, and safe havens like gold and yen to catch a strong bid. On the trade front, August 12th, US-China tariff truce deadline is in focus. Markets expect a 90-day extension, but Trump's sweeping new tariffs are already in effect. The US average tariff rate is now 15.2%, which is the highest since World War II. China, Japan, South Korea, and the EU are at 15% on autos. India faces 50% on Russian oil. Switzerland gets hit with 39% after talks have failed. Short term, the companies are absorbing the cost, but as inventories run down, higher prices will filter through to consumers, potentially weighing on spending and corporate earnings, as they have already been doing in the most recent earnings season, where a lot of the corporations have said that the tariffs had a massive impact on their profits. And the Fed officials also mentioned in the previous FOMC statements and press conferences that in quarter 3 of 2025, they expect corporations to start transitioning over the inflation that was caused by tariffs to the corporates over to the consumer side. And that's why CPI this week is so important. US core CPI for July is expected to rise 0.3% month on month, which is the biggest gain since early 2025. This is mainly driven by tariff pass-through in goods like furnishings and recreational equipment. Headline CPI is kept in check by cheaper oil at the moment. Wall Street strategists from Apollo, BNY Mellon, and Bank of America are warning of a stagflation setup, which means slower growth but sticky inflation. Some Fed voices suggest if inflation rises further, then hikes could be back on the table, which is a very different path than the 2 cuts markets are currently pricing in for this year. The UK labor market weakened in July as employers cut payroll budgets after Chancellor's £26 billion tax hike. Permanent hiring demand dropped to a 5-month low. Starting salaries grew at their slowest pace in 4 years. The Bank of England cut rates last week to a 2-year low, but in a closer than expected vote. Inflation is still forecast to peak at about 4% in September, keeping the Bank of England cautious. So when you're looking at GBP USD or GBP JPY, this news is important because the pound is supported short term by less aggressive Bank of England cuts, but medium-term direction will hinge on next week's UK jobs and GDP data plus US CPI that's coming up in a few days. St. Louis Fed president says that the Fed is still missing its inflation target, even as the labor market sits near full employment. So July's weak job reports that we saw with NFP were 4.2% unemployment and an increase of 35K average payrolls hasn't shifted the Fed from its higher for longer stance. On leadership, Fed Governor Waller, known for acting on forward-looking data, is now the front runner to replace Powell in 2026. and he has seen as more proactive on easing if growth slows down. This keeps the USD sensitive to any data surprises, especially CPI, PPI, and even retail sales. So as a market sentiment recap, when we're looking at equities, we see that the US 30 has stalled after a strong multi-month rally. August and September tend to be the weaker months for equities almost every year for the past 23 years. So profit-taking risk is very high right now. The dollar has also been under pressure for 6 sessions on dovish expectations, but CPI could reverse that quickly this week. The yen is still steady to firm on safe haven demand and tariff concessions from the US, and gold is consolidating but headline sensitive. Also, oil is at a 2-month low on optimism for US-Russia talks. So we just went over the fundamental and the market sentiment side. Let's take a look at how does that translate over to the technical side. So hopping over to first, US 30. Starting off on the monthly time frame, this month, we already had a massive bottom wick rejection right at 43,300. And currently we have a top wick rejection, so we're going to mark that off. This basically means that this is our range for this week and even potentially this month if price is not able to break past 44,500, which is going to be more of the optimism from a fundamental perspective, or break below 43,300. Dropping down to the weekly time frame, last week we closed bullish, holding onto a support right here at 43,600, and then a nice top wick rejection into 44,500. We came back down and we closed right at this weekly consolidation support from this historical price action. So now we have the new weekly candle forming, which is quite bullish right off the bat. This week, this is the range that we're looking at, as long as price can maintain above this daily consolidation resistance here. So what I would do now, after mapping out my levels based off of the higher time frames, as we drop down to intraday time frames, I'm going to start creating my zones to see what rejections I need to see and where are the most liquidity zones, so then we can avoid that coming into consolidation. On the 4-hour time frame, now dropping into the intraday time frames, we see major reactions at each of these levels that we have mapped out from higher time frames. Now coming onto the 4-hour time frame, we see a ton of consolidation here, which is that daily consolidation resistance right here. The new daily candle breaking above that. So as long as this new 4-hour candle can give us a bottom wick here and then push back up, we have a target coming back into 44,500 potentially. And then with tomorrow's New York session, the market will be pricing in the fundamentals that we just discussed, and that happened over the weekend. So now coming onto the 1-hour time frame, we're maintaining this nice bullish structure here. And then we had a bit of a consolidation coming back into that historical consolidation zone. We had our first hourly candle break above and close above, and now we're waiting for this new one to make a bottom wick and push back up. So potentially what we're looking at is moves of a bottom wick, which is going to give you a retest, and then a continuation back up. Ultimately, just looking for a healthy bullish structure to the upside, come back into some of these higher time frames, correct this massive sell-off that has happened in the past couple of weeks, and then another sell-off to come back into the zone of liquidity, which is going to be the major deciding point of which way we're headed as we get closer to CPI. So this week, CPI, PPI, and retail sales is going to be extremely important for US 30. And that's why we need to be extra conservative and cautious when it comes to our trades on any USD pairs, JPY pairs, and equities. Next up, we have GBP USD. The monthly is holding on to a nice support, so we mark that off at 1.32. Because the current monthly candle does not have a top wick, we're going to look at the next resistance to the left and mark that off. So here it seems like this is the next key area where price rejected that back in 19, and then a nice sell-off. We came back and held onto a resistance here again in 22, and then another sell-off. We approached this area here in 24, got pretty close to it, and then we had another corrective move. So this is a level that we're going to mark off, which is going to be that 1.352. Coming onto the weekly time frame, this level checks off again. Given that price rejected into this, we had a nice bullish momentum, a bit of a consolidation again at that 1.352. We tried to break above it, came right back down, and this weekly candle here also rejected that, just to come back down into 1.32, reject that once again, and hold on to support. So this tells us that this is a very important level, very important resistance, and very important support. Coming down onto the daily time frame, I'm going to start creating my zones here. So if I'm looking for any buying opportunities here on GU, I want price to break above this, so then I can target right into this. And then this is going to be a very important level where I'm expecting to see some more fundamentals to kick in, help us push past this. If we don't see that, there's a very high chance that price will come back into this level here again, into this resistance, consolidate, grab some more liquidity, correct the sell-off that happened here, and then give us another selling move coming back into 1.32 until we are ready to break either below this or above this. This is the range that we're trading in. If we don't have enough bullish momentum going into London session or even into New York session, then we are expecting price to reject right into the zone here once again, maybe a little bit top wick, and then push right back down, looking for sales to come back and correct some of this move, come back into this next consolidation area here and grab some more liquidity. So you have liquidity right there, and you have liquidity sitting right there as well. Coming on to the 4-hour time frame. That starts to confirm, given that the 4-hour starts to consolidate here again. So same thing, either you're looking for a wick rejection and then a sell-off, or price to push up a little bit further, come back into the next liquidity pool, and then a sell-off from there until we get better fundamentals. The sell-off would make sense when the USD starts to strengthen. Again, that's going to be a lot of the market expectations leading closer to the CPI, the August 12th deadline with the US and China's trade deal, and then any talks, any developments when it comes to any other potential trade deals. Euro USD has a very similar structure to GBP USD, so we have a very nice monthly support at 1.14. We have a bit of a top wick projection for this pair at 1.17. So this is a pretty good range for this month already. This week, what we see is that we have a bit of a gap up with the current candle. So we're looking for a bottom wick rejection because every gap needs to be filled. Any gap also signifies unfulfilled orders. So here we are potentially looking for a top wick and then a push back down. So I'm going to highlight this gap, and then we're going to drop down to the lower time frame. Coming onto the daily time frame, last daily candle on Friday closed bearish right into this zone. This new one made a bit of a bottom wick, and then this is where the candle opened. So we see that gap very clearly. We're looking for buying opportunities to push back up, tap into that 1.17 area, which is a very important level. Also, given historically, you can come back to the left and take a look at how price has been reacting here at this level. And we see that being respected as support resistance. And then here, drop down to the 4-hour time frame, we see more consolidation forming here. So that tells me that this is kind of the zone to zone trade that we're going to be looking at. We're going to look for buying opportunities as price breaks these 4-hour highs. Very short range, but very good scalp opportunity, potentially even a little bit higher up for a break or a fake out. And then we're looking for more fundamentals to kick in to support either the US dollar or the euro, which is going to help us either break above 1.17 for either a strength in euro or a weakening in USD. Or if we see the opposite, where the euro weakens or the US dollar gains more strength, then we're looking for another corrective move to sell opportunities coming back down closer to 1.14 area, but first targeting these minor consolidation areas in between. Then we have GBP JPY. Starting off with the monthly, you have a resistance formation here at 199.1, a bottom wick rejection at 195.1, and then we have a mid-level at this consolidation right here. So the point of the mid-level is that when we drop down to lower time frames, we want to pay attention to what kind of price action we see here, either heavy bullish pushes or sell-offs or consolidation. That's going to tell us whether or not that's a very strong liquidity area that we need to watch out for. Coming on to the weekly time frame, this also serves as our weekly range of where we're going to be looking for our trades. If we look to the left, this is a very strong support and resistance. So resistance here, and then support for this candle structure, and then a push back up. This is also a very strong resistance here, and then it was a bit of a support back in 2024 before a rally up. And then in between here, we see a lot of wick rejections. And if we look to the left, then we want to confirm these levels here once again. This was a very strong resistance and then a sell-off in about 2015. That is when Brexit was going on. And then look further to the left, a ton of consolidation right into this area. So these three levels check off immediately on the monthly and the weekly. And then when you come onto the daily, price gets very close to this level, rejects it, comes back down, holds onto a support in 195.1. Same thing, a lot of consolidation around this area. So this checks off as a liquidity area here too. And then after that massive corrective move that happened on August 1st, when NFP came out and all that stuff, and even the Liberation Day with the US tariffs, all that sell-off happened here as the yen gained more strength. We held onto a support into 195.1, and then we had that nice rally up that happened last week as we come back into this next consolidation area here as well. So right now we're at a very important level. We're approaching our higher time frame resistance. Now we create our zone. So the very first one is going to be this, because now we're above into this consolidation area. Last daily candle closed bullish right here on Friday. This one gapped down, made a bottom wick already into this zone, and it seems like we're pushing back up bullish, but we don't have enough momentum just yet. Come onto the 4-hour time frame and the gap becomes more visible. So if we're looking for any buying opportunities, I want to see price breaking above this, even for a quick scalp into 199.1. Potentially even a quick fake out into this area here again, as we're trying to gauge the yen's strength, and then this risk on and risk off sentiment in the overall global markets as well. But anything in between, stay out of it. That is all consolidation. You don't want to be stuck in a messy price action. And then you're looking for sells as price pushes up a little bit more or consolidates and then pushes back down. So the two setups that we're going to be looking at is either price taps into this, and then we see a sell-off, potentially even going into London or even the US session, and then push back down further. First target being 197.5, and then the next one back into 196.8. If not, then we're looking for a pushback up, a bottom wick rejection at the bare minimum, given if it's a high volume time, and then a pushback up into 199.1. And then the next target would be into these wick rejections here to the left. Then coming over to USD/JPY, with the monthly, we have a very strong resistance. So this month we have not tried going bullish at all on this pair, seems like. And then we have a bottom wick rejection into 146.8. Come on to the weekly, and that is that massive top wick rejection right here back in July. Price pull back down. And so here we're going to mark off a mid-level, which in this case seems to be about this, which is the resistance for all of this, support in the past, and then resistance here as well, and then wick rejections here for all this consolidation, which is going to be 147.9. This is our weekly range at the moment. On the daily, all of this is consolidation. So again, resistance to support or support to resistance, a zone to zone trading opportunity that we're looking at. When we're looking at the overall structure, price has maintained a very strong support right into this area here. And then this all seems like consolidation, but even within that consolidation, we have maintained a bullish structure to the upside, breaking new highs and even testing the same exact highs, and then finally a retracement, but still creating higher lows at each point. And same thing here as well. So even though this is consolidation, we're still creating a higher low. So price is not breaking into a bearish structure until we can break below this and come back down deeper into 145 area. Even then, all of this is just going to be purely corrective move for short-term trades or even potential short-term swing trades. And then after that, if price breaks below this, then we are breaking into a bearish structure. As of right now, we are currently just generating more orders, sitting in a liquidity area. The reason why it's a liquidity area and the way that you can test it is every time price exits out of it, there's a ton of volume either to the upside or to the downside. Coming on to the 4-hour time frame, price has rejected into that resistance already. So now that we're going to start creating our zones, we want price to completely clear out of all of this messy price action here, even this previous consolidation, same thing here. So then we can look for sells to come back down into this next support of 147.121, or even further down into 146.8. If price holds on to a support here and then pushes back up, then we're looking for buying opportunities to the upside, coming back into 147.9. Same thing, we need fundamentals here in order to break past this because price has already rejected this multiple times, confirming that this is a very strong resistance area. We need those fundamentals to finally break above this and then continue back up bullish. That's a massive sell-off that has yet to be corrected. So at the bare minimum, when price breaks above this, you're targeting right here with the next level at the wick rejection, and then the next level right here, which at that point you will have corrected almost 50% or just over 50% of the sell-off. So right now we're just collecting orders. And then if we start looking for USD weakening or the yen gaining more strength, then we look for sells to come back down here, and then potentially we're looking for further sell opportunities to tap into 146, which is the next liquidity area, next consolidation area. Once again, anytime price comes close to this 146 area, there's a ton of volume to the upside, and that's your confirmation. And then finally, we have gold. Gold is right now consolidating. Even on the monthly time frame, we see a lot of that. So one Gaza or Russia headline could break this out pretty fast, or even CPI data. So this week it's going to be very important because we're expecting gold to be very volatile and react very quickly to any of the headlines that will come out. But other than that, we are seeing that as these new headlines are developing, price is consolidating here, and we are starting to see a lot more of price tapping into previous liquidity areas, previous consolidation areas, previous all-time highs as well. Now coming on to the weekly time frame, that is the weekly resistance here as well. As we can see, this one cuts right through this weekly consolidation, which was then respected as support about once, twice, and 3 times. Now we come on to the daily. On the daily, we see that consolidation even more clearly, which is all of this right here, that resistance, which is 3362.2. And then once price broke above that, it slowed down in the volume here too. We had one last push on Thursday, and then Friday it made a top wick, closed back down bearish, and today it's already pushing back down and kind of hanging around in this area. So this is our zone to trade until we get more volume in the market and until we get better fundamentals as well. When we come onto the 4-hour time frame, this was that consolidation support. Price broke below it, so it's headed back down here. Here we need to be extra careful now, especially as price is breaking or approaching that 3362.2. What we need to see here is price taps into this, bounces off of this area like it has in the past, and then a push back up. This is going to be a very important level. By this time, you should take some profits. You're looking for a scale in, then you wait for a retest above this, continuation up into 3411.8. If not, then we're looking for further sell opportunities if we start to see more of a risk on sentiment, more optimistic news coming out and all that stuff. Then you look for a retest and push back down. But any of these areas could be very significant for a bounce for gold. So this week, the way that I'm going into this week, my bias is going to be very cautious. CPI, tariff headlines, geopolitical developments are the big swing factors here. So be selective on your equity longs, reduce any size ahead of CPI if you are already in a trade, and watch USD reaction after CPI for any Forex bias here for any of the pairs that you're trading. And then finally, keep gold and yen on the radar for geopolitical shocks. Trade smart, manage your risk, and I'll see you guys in the next breakdown.